All right, welcome back to this week's breakout watch list from November 28th to December 2nd. After a shortened trading week last week, there are plenty of high quality setups both on the long side and the short side to look at. And as this market rally continues, the groups of stocks leading the charge have become more clear. So in this video, I'll be covering the top 12 setups from the long side. If you want to see some quality short setups that I'm watching, I've listed them in the comments section below. And this video is sponsored by MarketSmith, which is the trading research platform that we're going to be using to break down each of those 12 setups. Along with MarketSmith, Investors Business Daily has another product called IBD Digital that they're running a Black Friday sale where you could get it for 1 month for just $1. Both the links to MarketSmith and IBD Digital are in the description below. Here are the setups that we'll be covering today. As you can see, they're in groups of semiconductors, some steel, biotech, energy, and other. I don't want to waste any more time here because we have a couple more setups than usual to cover today. So now we're jumping over to MarketSmith to take a look at the first semiconductor stock, GFS. As you can see, this is an IPO stock that IPO'd in October of 2021, so about a year old now. This stock has put in its low in July of 2022, along with the market putting in its low, but then later on the market put in a lower low, and this stock put in a higher low, showing relative strength not only to the individual stock, but for the group as well. Overall, very strong fundamentals. The last 2 quarters have earnings per share growth over 1,000%, sales up 22%, after-tax profit margins up 17%, all good there. Within the group of 32 stocks, this is ranked 5th on a relative strength basis and 9th on an overall composite basis. Taking a look at the price action more recently, we popped over the 50 and the 200-day moving average on that earnings move and have been just trending nicely above a rising 8-day EMA since then. We did have a shakeout on the 17th here under the 8-day, but we closed right at the high of the day, up 3.7%. And this was a day where the market kind of gapped down and then found its footing as well. From there, last week, we just traded basically sideways on lower than average volume, allowing the price action to tighten up. I'll be looking for a break over $68 as a potential entry point with a stop under Friday's low for GFS. The next semiconductor stock that we'll talk about is MTSI. This trades about 500,000 shares a day, but it is a $68 stock, so it should fit most traders' dollar volume requirements. Similar to GFS, put in a low in July, then a higher low in October. Since then, broke back over the 200-day, the 50-day, the 21, and the 8-day EMAs. All of those are in the correct order, which is nice to see. After getting extended in the short term, we've pulled back for the last 2 weeks to the 8-day EMA, and as you can see, a lot of the moves to the upside have been on heavier volume, and then a lot of the pullback days have come on lighter than average volume, which is exactly the pattern that we want to see. If this needs another week or so to just chop around, allowing that 21 EMA to catch up, that would be perfectly fine as well. But we are starting to form basically a 3 or 4 day pivot here using, what would that be, Wednesday's high, 69.44 as a potential entry point, and then just a stop under the low 67.75 area for MTSI. Next we have PI, also a semiconductor stock, and one of the 12 stocks that make up my potential market leaders. Nice to see it break into all-time highs on Wednesday, inside candle on Friday. Remember, Thursday, the market was closed for Thanksgiving, and then we had a shortened trading day on Friday. But even with the shortened trading week, we had above average volume, or just at average volume, for the nice move to the upside, which is nice to see. This 120 area will be my main focus. If the market comes in and we see the market kind of sell off to start the week, does 120 hold, and does the 8-day EMA on the way up around 117 hold as potential support? That's going to be key for this stock. I would love for it to kind of pull back to that 8-day EMA, get a lower risk entry point versus 120. But if the market's strong, I don't want to make excuses for this stock. Strong stock in a strong group, it should be just zipping out of this 120 area. Fundamentally very strong, 950% earnings per share growth, 51% sales growth, 14% after-tax profit margin. And out of the 34 stocks that make up the group, this is number 1 on relative strength, number 2 on accumulation distribution, and number 2 overall composite rating. This is PI. And last semiconductor stock I want to talk about is RMBS. This one just under 1 million shares a day, also broke into new highs a couple weeks ago, a little bit before PI did. And then is pulled back to that 8-day EMA, undercut it a couple days, but we're really starting to see the price action tighten up. Volume has been elevated still. In ideal world, we see volume pulling back along with that price contraction, but still a little elevated. Same with MTSI. If we get another week where this just kind of chops sideways, allowing that 21 EMA to catch up, that would just improve the setup. But we don't want to make excuses for market leaders. If the market itself is finding a bid and moving higher, this should have no excuses not to. This is RMBS, just looking for a break over Wednesday's high, 37.88. Next, we're jumping over to the steel group, and I have two steel stocks to cover. The first one is STLD. This was on the breakout watch list last week as well. We were watching this $100 area, a break to the upside, and we got exactly that on just about average volume. Then we pulled back on Wednesday on lighter than average volume, and then volume on Friday, very, very light. It's a half day of trading. We don't expect it to be heavy there. What I want to see here is if the market pulls back in, that 8-day EMA, right where we saw some resistance previously at like 102 is a potential area to buy. Or if the market really comes in, if this pulls back into $100, then you could use the 21-day EMA as a stop loss. We just want to make sure that we're buying not on the initial pullback, but allow the stock to pull back and then find some buying support, and then we're buying as it's coming back through. We're not just randomly buying as the stock pulls back, because we don't want to be the first buyers in. We want to see some buying confirmation before we put risk into the market. This is STLD, very strong fundamentals and a group that we want to be focusing on. The other steel stock I wanted to cover was NUE, very similar setup to STLD. STLD is a little bit stronger because it was making new highs, but this one is also pretty strong above that 50-day, the 200-day, but those aren't in the correct order. Ideally, we have the 50-day above the 200-day. That's why this is the secondary stock in that group, but also pulling back to the previous breakout point on lighter than average volume. Another couple days pulling back into 145, where you see resistance once, twice, 3 times, 4 times. Once we break over and close over resistance, we should be seeing some buying support at that area. And you also have the 8-day EMA at 145. Let's see, on Friday it was at 146.37. So right around 145 is where we want to see it on a pullback. This is a little extended from the 21 EMA, where I don't want to be buying this on strength as it breaks through 145. It is more of a pullback buy that we come back into that previous area of resistance, find buying support, and then put risk into the market. For NUE, the second steel stock that we covered. Next, I have 2 biotech stocks for you. The first one is PCVX, and I think this has been on the breakout watch list before, as it has really moved up about, let's see, from 25 to 45, about 100% move, much less than 8 weeks. So this qualifies for that high tight flag setup that we saw all the time in 2020, a little bit in 2021, but really haven't seen many setups like that in 2022 with this tough bear market. Given that it is a biotech stock, we do want to size this down a little bit because they have much higher probability of those gap downs. So instead of putting a 25% position on this, more like a 10%, 15%, especially if you're holding it overnight. I don't tend to hold biotech stocks overnight any more than 10% of my overall portfolio. But very strong, powerful move on above average volume, up 100%. From there, we were tightening up, kind of forming this pivot at 45. We had a false breakout, and then this really nice shakeout day to the 21 EMA on the 17th. Found support right at $40, the low was 40.10, and that 21 EMA. From there, we've had 4 or 5 really tight trading action days, and we could just look at $45 as the potential pivot to the upside there that we're looking at. This doesn't have any earnings, no sales, anything like that. Again, it's a biotech. We want to position size down a little bit more, but they do still have power. Biotech stocks, 24th strongest group out of 197 in the market, so that's an A group strength rating for PCVX. Next, we have PDSB. This is also a biotech stock, the second one that we'll cover. Had its highest volume in over a year move on the 14th, closed up 26% on 2,800% the average daily volume. So a massive change in supply and demand in this stock. We had follow-through day volume the next day where the stock was up another 23% on 800% the average daily volume. And after one consolidation day, we had another day where it pushed up 10% on 123% the average daily volume. So a noticeable shift in supply and demand. We're now back above all the moving averages. The 50 days starting to flip the 200-day, and that 200-day is now getting in an uptrend itself. It does have some overhead supply to the left here, so it's not one of those A-plus setups that we're looking at, but it is starting to tighten up really well above the rising 8-day EMA. You can see on a 30-minute chart, starting to respect that $8. Well, undercuts 8 just by a little bit. The low is $7.98, so just a 2 cent undercut there. allow this to tighten up. We're looking for a break over 863 as a potential entry point, and then a stop loss under that 795, 793 area for PDSB. Now we go to the third group that are holding up well. This is energy. This one specifically is coal, AMR. Another stock in that group that you might want to focus on is BTU. A little bit stronger, right near all-time highs, but a little extended from the moving averages. That's why I'm choosing AMR for this video. But the more stocks in the group that are starting to work up, the better. This one, very strong fundamentals, earnings per share up 220%, sales 34%. Energy coal as a group has really been digesting its move from about June of this year. So months and months of forming another base after a very, very strong stage 2 uptrend. Now looks like potentially ready to break into all-time highs here. We have the moving averages in the right order, the 8, the 21, the 50, then the 200-day. And all of those are starting to curl up. We're looking for a break over the high from November 22nd, which is 170.95 as a potential entry point for AMR. Another energy stock is ENPH. This is an energy solar specifically, which is the second strongest group in the market out of 197. A couple other stocks in that group that are really leading the way, but are slightly extended in the short term are First Solar and ARRY. SHLS is another kind of secondary name along with ENPH that isn't too far extended, but isn't like the most powerful one or two names. This one is very, very well known in the CanSlim community, so probably has a lot of swing trading eyes on it, has all the fundamentals that we look for, has the price action, it's in a stage 2 uptrend, all the moving averages are in the right order, and we're right near 52-week highs here. Because it is so well known and so obviously right at highs, if this doesn't get out of $324 area and breaks through $324 with massive, massive volume, I would be looking to sell at least a portion into strength with that initial move. We saw a similar action with SWAV, very heavily watched swing trader name that it got out, but then immediately kind of came back in. So when a lot of swing traders are all watching the same name, if we don't see institutional type volume where it's that initial break into new highs with massive volume, but also consistent volume throughout the day bidding the stock up, then we got to be a little bit more cautious with our position sizing and if we want to sell into strength here. So looking at just a break into new highs, 324, call it 325, but also with heavy volume for ENPH. And finally, instead of picking an individual oil and gas name or a couple oil and gas stocks, I just went with the leveraged ETF ERX. This looks for 2 times the performance of XLE. And whenever you're doing technical analysis, you want to do it on the underlying ETF. You never want to do it on the leveraged ETF. So looking at XLE instead of ERX, but if we want to be trading, we want to be trading something with a little bit more juice to it with ERX. But XLE, nice kind of double bottom here. Didn't undercut the low, so technically not a double bottom. Still has that shape. Went into new all-time highs. Had a gap down on the 21st with some news that ended up not being true. So you saw a very strong gap down and then a rally midday to close right near the high of the day. Let's see, right at the high of the day, back above the 21 EMA. So really nice shakeout. Any of the swing traders in these oil and gas names got shaken out, myself included. But from there, we had another day moving up 3.1%, closing right near the highs, and then Wednesday and Friday, very tight price action, very low volume. That makes sense going into the holiday. So with this, we're just looking for a break over Friday's high on XLE, and you could do the same idea for a break over the high for ERX if you want a little bit more juice with the trade. Looking at $74.89, call it $75. And the last stock that we'll cover today is SANM. It's in electric contract manufacturing, the third strongest group out of 197 in the market. So it has an A+ group strength rating, a 95 earnings per share rating, A- accumulation, 99 overall composite, 98 relative strength. Very strong stock, very strong group in a nice uptrend. Taking a look at the technical analysis, we see the move from $40 up to $70. We pulled back to the 8-day EMA and had a shakeout on the 17th, similar to those oil and gas names and PCVX, where you have a shakeout, you clean the deck of the weaker hands like swing traders like myself, and from there we see really tight price action, still closing above that rising 8-day EMA the entire time. If we need another week or so, allowing that 21 EMA to catch up, again, that would be fine as well. but we're looking for a break over Wednesday's high, 67.32, as a potential entry point for SANM. And that's going to be the breakout watch list for the upcoming week. Remember, those were all long setups. If you want to see the short setups that I'm watching, go to the comment section. I've listed them all below. A big thanks to MarketSmith for sponsoring this video. MarketSmith was the trading research platform that we were using to break down each of the setups. If you liked what you see and want to give it a try yourself, there's a link in the description below. And finally, if you want to hear more from me throughout the week, you can follow me on the other social media sites. I'm at Nick Drendel on Twitter and at Nick_Drendel on the other sites. Have a great week, and I'll see you guys in the next video.